What's up guys, Americana back here with another video. We're going to be diving into a super interesting one today, so let's get straight into it. Everybody's begging for the Fed to cut rates, but for me personally, it could be the thing that actually signals a crash is already underway. Today I'm going to be showing you guys why I think it's possible. We'll look at the data, you can make your own decisions, but regardless, I do think it is very interesting. So let's get into the video. Alright guys, just to familiarize yourself with the chart, we have Dow Jones up here in the candles. We have the Fed fund rate in the little magenta, we'll call it, burgundy, whatever, purplish line graph. Let me make that a little bit bigger for y'all. And then we have Bitcoin down below. I have it zoomed in because it obviously doesn't reach out to 2007, but we do have a little bit of data on what could potentially happen with Bitcoin. So this is a pattern that I don't really see anybody talking about, but found it one day and kind of thinking about giving it a little bit of weight in my thesis this go round. If you don't know anything about like this 2023 area within the Dow Jones, right? Fed was obviously raising rates, and all you heard on Twitter, all you heard on X was don't fight the Fed, don't fight the Fed, don't fight the Fed, don't fight the Fed. But we were still able to find a bottom. We were still able to pump, from 29K to about 35K, even with the Fed raising rates. So this is kind of what piqued my interest for me to go back and look at this data, because when the masses start screaming something, my investment style, my thesis, the way I like to research, what sparks my interest is not necessarily how can I prove them wrong, but why are so many people talking about this one common thing when typically most people lose money in this market and in markets in general. So this thesis that these common people have is likely going to lead them to lose money, which it did. But then I just started kind of diving into what the actual relationship was between, Fed rates and stock markets and stuff like that. Obviously, in Economics 101, they teach you, the Fed fund rate sets the baseline rate for all asset borrowing and the risk-free return rate, things like that. So I know it has a lot to do with bond markets. I know it has a lot to do with real estate, but don't really see anybody ever talk about it with stock market. They do, but it's kind of just like money printer go burr, ooh, quantitative easing, things like that. Not necessarily any deep dive into the analysis. So with that being said, let's get into it a little bit. All right, I don't want you guys to think that I am cherry picking this data. So for full transparency, all right, we do have data of the Fed funds rate going back to 1954. And these are a little bit mixed, right? It's a little bit mixed on what's actually happening in here. I wouldn't like to use any data before 1971. We were on the gold standard at that time. Okay, so that's not really indicative of current macroeconomic or monetary policy. And one thing I noticed is that this was kind of just like a bouncing around of this Fed fund rate, right? This is kind of just up, down, up, down, up, down. There wasn't ever really any pauses in here. One thing I noticed that we kind of started come around to December of 2000, right? So not kind of like the modern era that we've been living in the last 20 years of like these huge bubbles and bursts and things like that, which we've always had, but they were just a little bit different back then, right? Where we had this like area where we paused, right? We would raise rates and we would pause, something would crack. We would raise rates, pause, something would crack. We would raise rates, pause, and then a little bit of a special case here. But like I said, it's not the end all be all, but it is something to think about and add to your overall thesis. So let's get into it, right? 2001, we all know stock market or .com bubble, okay? We see the Fed start cutting rates, and stock market doesn't necessarily make any new highs, but we don't crash until about 6 months later, right? 5-6 months later, okay? Come here, Fed starts cutting, and keep in mind this is a continuous, what does end up being a continuous cut. And we'll get back to that in this example, but this goes straight into continual cutting, right? No change of policy in the near future, right? 2007, July, we start cutting. make a little new high in October, and by the next May, so 8 months, 9 months, right? We are in what ends up being the 2008 recession. Now let's go over to July of 19. We do have Bitcoin in this example, so we'll dive into it there. But we start cutting in July of 19. Market rallies until January of 20. So 6 months, right? And then COVID fears, boom, crashes the market, with Bitcoin crashing, 60, 70% with it, right? From 11,000 to, this actually went lower than this. It went to 3,500. The line graph isn't going to catch the wicks. It's kind of like an average, but crashing very hard and aggressive, right? What we're looking at in this new climate and how I'm kind of playing it is, keep in mind with these other data points here, right? Obviously, we do have the same pause that we saw before, but one thing I mentioned is this was a reversal of policy. There was no going back. Whether it's because things were already broken behind the scenes, whatever the reasoning was, there was no reversal of policy, right? Here, we cut for 3 months, and we've been paused since, right? We've been paused since January of 25 all the way to May, okay? Or really June now, sorry. We're in June, but all the way to June, and the next meeting is next week. I don't think they're going to cut. We'll monitor. And then the next meeting after that is another one in July, which I don't anticipate them cutting, right? This is kind of just, there's data points out there on when you can expect cuts and not to expect cuts, right? And it's similar to like a poly market or these like mass market makers, right? Where people with information can place bets on it and things like that. So it actually is ends up being a reliable source of information. Anyways, if you guys have seen my other videos as of recent, I'm anticipating top around October, November, December of 25, right? By 2026, I will have sold everything most likely, okay? But there's no Fed meetings, okay? There's no Fed meetings in August. There's a Fed meeting in September, October, maybe November, but definitely December, okay? All right, so in those meetings, right, let's say we don't cut either one of those meetings, right? Perfectly fine to stay paused. Market can obviously pump when we're paused, right? Bitcoin went from 38 all the way to a high of 73, but actually 62, so 100% about, before there was a cut, right? So we can move in these pause markets, all right? But anywho, looking at this here, and with other things that I'm looking at, obviously, if we do start getting cuts, right? If we get a cut in September, I'm not saying I'm selling everything, right? I'm going to look at how the market reacts. If altcoins are popping off, if all of this stuff is going crazy, right, then yes, I'm going to be selling. I kind of would be selling regardless, but this is just going to be another thing to pile on to the thesis, right? Because like I said, it's possible that we can even pump, after we get cuts and things like that. So let's just try to get a drawing on here. Let's say market kind of pumps, we get a cut. Oh, we pump even more. Last meeting of the year, we get another cut, right? Let's say this stays flat. They cut, but now this time this is a real cut, and we continue to cut, right? And why would we continue to cut? Because the market has turned over, all right? And obviously, what you could anticipate happening to Bitcoin in this example, similar things, right? Similar things. And we keep cutting, right? We keep cutting because the market is crashing, right? As you've seen in every example, they will continuously cut, but that doesn't mean that the market is going to turn around because of it, right? So rather interesting data point that I've noticed, and something that I think you guys should keep your eyes on. I know this video is a little bit more free form, so let me know how you guys like that. Not as scripted as if you've seen my short form stuff. Definitely not as scripted as that. and kind of a topic that I'm okay to rant about. Do a lot of research into these type of things. So I don't know. What do you guys think? What do you guys think? I don't want to say it's the end all be all, but it is a good little something to have in your back pocket. And those are the best theses, in my opinion, right? Is something that's not necessarily like any of it is the end all be all, but you kind of take bits and pieces of information that has worked in the past or stuff that is going to get, retail is going to react a certain way. The biggest thing is just not being on the same side as retail, right? If retail was betting on, don't fight the Fed, we can't pump until the Fed decides to cut rates or pauses or whatever, right? Well, not only did we pump, we found a bottom and pumped, right? We were literally reversed the entire market from September of 22, which hasn't been unreversed all the way until now, June of 25, right? So probably by the time Bitcoin tops will have been 3 years, all with 1, no rate cuts, and 2, actual rate increases, okay? So we're keeping that same kind of line of thinking, that same logic, and people who have, not that they've been waiting for 3 years, they've FOMO'd back in by now, but these are the same people who are saying, rate cuts are coming, Bitcoin's going to the moon, institutions are buying, governments are buying, and we just got rate cuts. I'm so bullish, right? Probably a good time to sell, okay? Probably a very, very good time to sell. So that's my main trigger on selling, is just avoiding being on the same side as retail. But I know emotionally this is going to cause X type of reaction out of retail, right? So that's why I'm giving it more and more weight as time goes on and as more people, I see discourse on Twitter or whatever, right? But let me know what you guys think. This was a long one. This was a little bit of a rant. So I'll keep it short and wrap it up here, but I hope you guys enjoyed this video. As always, you can go in the description. I have some free materials there. I have a free Discord as well. Obviously helping as many clients as I can. So if you are interested in a membership or have questions about it or anything like that, you can ask me in the comments, ask me in the Discord. Those of you who, continue to like my videos, share, comment, things like that, just want to say I appreciate you guys. It's been about 6 weeks or so since we started the channel, and on the short form stuff, we've got some momentum, And my Instagram's doing well, TikTok's doing good, so I appreciate you guys giving me a voice, listening, hearing me out, my thoughts, right? I'm never going to be perfect, never claim to be perfect, but I do think, some of my stuff can definitely help people navigate this market, right? Even my free stuff. So anyways, we'll wrap it up here. I appreciate you guys. Americana out.